Let's connect with Devina Mehra as well, who's joining in on the show, chairperson and chief investment strategist at First Global. Devina, morning. Great to have you on board as always. Let's start off by just getting a view as to how you believe India is currently positioned, given the fact that we have really been moving from strength to strength, and mind you, without support from the foreign institutional investors. What's the road ahead looking like with big events like the elections lined up?
Good morning. I'm not, as I've said often on your show, I am not one to track FII flows, and therefore, I never had any belief that FII flows are what determine the markets, even when the mutual funds were not that big in India or almost did not exist. So, that apart, my view has actually not changed, I think, from the last time I was on your channel, which was to say that we don't see any risk of a big crash. I don't see that. Mainly because there was a whole decade where we underperformed from 2000 to 2020, both in global terms as well as relative to our own history. So you compounded only 8.8% in that decade instead of that 15-16% we expect. And even this decade, it's not been that it's been a great one, mainly because of all the pandemic and all those related news. So the point being, we are not above the trend line. So the risk of a crash comes when you're far above the trend line. And this, I'm talking the large cap mainstream indices. So that risk is low. Of course, there might be for some weeks a sideways move, a correction, and that sort of thing. So at the moment, actually, our portfolios are hedged partly because we just to be on the safe side. But we are not in cash because if you're in cash, you miss out on the up move. So we don't want to take that risk because the probability is still high that you would have a good year. In our global portfolios, we are overweight India. So clearly, a view on India is positive. Where you need to be, more careful is things like small caps, micro caps, IPOs, basically the high end, high risk end of the market. And also within the mainstream industries, also choose carefully. For example, banking is a sector we don't currently like, and so on. So you have to choose the companies and sectors, but otherwise, I don't see on a longer term basis any great risk. Elections, obviously, the probabilities are only one way. But I would also like to say that, that often we play it up in our minds much more, like 2004, exactly 20 years ago, there was a big upset. Everybody expected NDA to come back, and instead, the UPA, as it became later, came in, and the market crashed on the day. But then, within a few weeks, it was forgotten, and that year was one of the better years in the history of the Sensex. So that's how it goes. So, I don't think, that's ultimately the big determinant.
Absolutely. Devina, hi, morning. You just alluded to banks. Curious to know what's leading to this underperformance.
Well, banks, if you look at last 4 years, we're just about finishing 4 years of our PMS. So we started in February 2020. And if you look at 2020, 21, 22, 23, actually banks have underperformed in 3 of those 4 years. Only in 2022 they outperformed, and that coincidentally or otherwise was the only 1 year where we were market weight to overweight banks. So if you look at 2020, that was the only major sector in the negative. In 2021, the market went up 22%, Bank Nifty went up only 11%. 2022 was the only year, as I said, where it's outperformed. 2023, we are again back to going up only half as much as the market. So that, the outperformance by banks is actually the news when it happens, because it happens far more rarely. And I
Seem to have a bit of an audio issue with Devina at this point of time. We'll try and reconnect the line, because for now, in terms of the market, it's Honasa Consumers that deserves mention for that 9% up move. Cement was having a great run at the end of the day on Friday. We had seen names like, India Cement, Shree Cement of the world perk up, and that move is continuing today, at least with the likes of Star Cement, etc. Indigo Paints is already holding up in the green. Godfrey Phillips is the other one, which has decent amount of volumes to back it up, and JK Lakshmi Cement as well. Devina, sorry, we missed you there at the end of your point. Would you want to complete that?
Yes, so I was saying in banks, 3 out of 4 years they've underperformed, and 2022 was a particular sweet spot because you had the uh, NPA cycle behind you, credit was growing well, and when interest rates are going up, bank margins go up at least at the first round. So that was a particular sweet spot. Again, now you're seeing going just by what RBI itself is saying that there are risks on the credit side, and that's really my issue with banks normally, that negative surprises come in much more often than positive surprises. And sitting outside, there is no way you can assess what the credit quality of a bank is. So you have to be super careful. Well, we are quite underweight banks, and within that, we are skewed more towards the PSUs than the private sector. So that's broadly what we have right now.
Yeah, Devina, just one last question. You said the trend line is one thing that you're watching closely. What is above trend line and has completely left the trend line out of the park right now is all the PSUs, whether it's power financiers, whether it's bank, railways, defense. They don't care what the trend line was. What do you do with those stocks?
So be careful, but on the other hand, also remember that the PSU index crossed its 2008 high only in 2023. So all the people who were talking about PSUs for years on end, it took 15 long years to come back. So the cycle always changes in a market, that something that goes up comes down. I mean, we say it's a giant wheel, so you have to see what moves next. So just because it has moved a lot in the last few months doesn't necessarily mean that it is dangerous, but you have to look at each individual stock and what the moving parts are and what the expectations are. So now you cannot just buy as a pack.
Appreciate your time, Devina. Thanks so much for highlighting your views on the market.